JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 19th of May 2021. So yep, welcome everyone. Welcome to this Wednesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, so yep, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yeah, feel free to check us out here on jfdbank.com and click on the research tab right there on the top, guys. So now then, so yeah, whoever's joining in right now, so yep guys, to everyone, good morning. I hope you're having a beautiful start of Wednesday. I can see Evo in the chat room here. Good morning to you too, Evo. So yeah guys, jumping into the chart, the first one I want to pick up here is Nikkei 225. So with the index here, we saw it in yesterday, for example, you saw this one closing above this 28,326 territory, but I said that in order to consider the upside, we still need to see a push above this 28,760 territory right here in order to get a little bit more excited with the upside. And as you can see, why? Because of course during the US session we drifted lower, and yep, it kind of dragged the cash equities as well, the ones that were closed, and yep, it dragged them lower. So you can see the result we're getting here right now. So basically, the index is back below this 28,326 territory. And now, in a way, this idea is still kind of working out, I would say. So I'm still going to stick to it. And my next target, I would prefer to see, of course, but again, the market doesn't always do what we want it to do. But nevertheless, the idea here that what I'm going to be aiming for this 27,000 territory near this 200-day EMA, because as you can see, currently we are struggling to get back above the 100-day EMA, shown here as the green line, and yeah, keep that in mind. If we climb above it, yes, then of course we'll consider some higher levels. But to be honest, for me, I would prefer to see a push above this barrier first, the 28,760 territory right here, because at the same time the index would be placed back above the 21-day EMA. Shanghai Composite also declined a little bit after kind of coming close to testing the upper side of the rising channel here, and yeah, I mean, it started drifting lower. I would say correcting lower. It's still there. We are still trading above this 3,496 territory. Now, a bit of a disconnection here between the two indices, and for now I would say I'm still going to be very careful. If, let's say, the index here continues to trade above the 3,496 territory, then yes, another push higher may be possible. If we get a drop back below this hurdle, now this is where we could maybe consider a move back towards the lower side of the rising channel, and then yes, and then yes, we would of course see if this idea that I talked about previously, the one that I mentioned previously, that if this rising channel is just part of a part of a larger correction, because the prevailing trend, as you can see before entering the rising channel pattern, the prevailing trend was to the downside. So that means that maybe this could continue moving lower. I mean, this is a traditional standard technical pattern, but again, for these things, certain confirmations need to happen still, because again, anything can happen. It could still ignore this whole thing, this whole idea, and then continue pushing higher. So be very careful with that, guys. So, and with those shorts, and the moment I would say, let's go step by step. And if we drop below the 3,496 territory, then yes, and then maybe we'll consider a bit of a decline here lower. However, even then, we would still need to be careful near the 21-day and the 100-day EMAs here, which could in a way provide a bit of support. Now, you can see in the chat room here, good morning from Tamino, good morning to you too. I hope you're having a wonderful, wonderful kind of morning. So, coming back to the charts, guys, the German index, DAX, and yep, this is the thing that I mentioned to you yesterday in my Trader's Tea Time. Basically, it seems that of course the standard kind of pattern for a reversal, it seems that we go and we hit a new all-time high, but at the same day we kind of drift back down and close the candle in the red. So so basically similar story happened here, for example, on the 16th and 17th of April, 16th and 19th of April. So as you can see, on the 16th of April we've hit a new all-time high here. Then, but on Monday, I think that was Monday, we drifted higher and we created a new all-time high. This area near the 15,502 zone, and then we kind of quickly reversed back down. So basically ended the day in the red, and look what happened then after. We saw the next day kind of declining as well. So if we follow the same logic, then well, you probably know what can happen. If we take a look at the cash index, we'll see that the price is actually already below this closing price. So basically, we are actually drifting like this. We are drifting lower. But at the moment, I would say let's be careful. Let's be careful near the 21-day EMA. And as I said to you previously yesterday, that that basically if we get a drop below the 21-day EMA and below the 15,215 zone right here, this is where I'm gonna consider a bit of a kind of a larger correction to the downside. Again, I'll aim for the 14,845 zone right here, or below that, slightly below that. But again, like I said, let's keep it short and simple for now. Like I said, we have an index which declined, which yesterday created a new all-time high. Then it declined back below the previous all-time high. And let me just mark this level here. That's the all-time high near the 15,538 zone. And then yes, we had a decline here, and now we are seeing the price on the cash index trading somewhere near the 15,267 territory. So it's around 70. So basically still above the 21-day EMA, but very close to it. So now, like I said, let's see how all this area is going to play out. If we drop below this and we stay below the 15,215 zone, then yes, we could consider a further decline. Quick update on DXY. So again, the same analysis remains here, but yesterday I talked about this when I said to you that first of all, wait for a drop below this 89.98 zone. We got that, so yep, this confirmed a forthcoming lower low, and I said that my next target is the lowest point of February, near the 89.68 zone, which we managed to test. So that's great, good achievement. However, you can see my arrow here is kind of drawn all the way towards this 89.23 zone, which did provide very strong support here in January this year, and kind of is near the lowest point of this year. Let me just, approximately around there. And also, if we go back into history here, this area also acted as a very nice area of support in April of 2018. So basically, we're kind of aiming for a very strong support zone. So let's see how that's going to play out. But again, at the moment, everything's kind of leaning a little bit more towards the downside. Gold, of course, is enjoying that moment that DXY is drifting lower, and yeah, you can see that yesterday we found very nice resistance here near this 1875 level, the one that I kept talking about, guys. So we managed to, after a break of this downside line, we managed to reach the 1875 territory. And what I said to you previously, that to get, let's say, more comfortable with the upside, yes, a push above this barrier is required. But looking at this picture right now, this is where we're going to kind of slightly amend not the outlook. The outlook still remains the same to the upside, but the near-term outlook. In terms of this level, so if, for example, we see a push higher today, but if it fails, if the daily candle fails again to stay above this barrier, above this 1875 territory, and drift back down, then maybe we're due for a bit of a corrective move here to the downside. But if it stays above this hurdle, then yes, we will continue aiming higher towards the 1907 territory right here, marked by the high of the 21st of December and the inside swing low of the 7th of January. And then we will take it from there, guys. So yep, keep your eyes on that. Jumping into WTI oil, so here you can see a beautiful decline, beautiful move lower. But what's interesting here is that once again, this 66.40 zone continues. Once again, it provides good resistance. So I kept talking about this several times now, and that although we had a nice push above this barrier, we need to wait for that daily candle to end, because as you can see, this is the result we're getting. We had a push higher. This is where a lot of probably bulls started jumping in, and then we basically had a beautiful decline, which probably took out a lot of buyers, and well, that's the result we're getting. So basically, once we see something like this, guys, be a little bit more patient and wait for that daily candle to end, because basically that's the ugly result that we might get eventually, and yeah, and basically a lot of stop losses might get triggered. So long story short, for now, if you're looking for the upside, again, I'll say that if we get a nice pop above the 66.40 zone, yes, that's great, but I would prefer to wait for that daily candle to end above this area, and then I could go for some higher levels. But now, given that we saw the slide, I mean, at the moment, I would say that I would like to see a break of the lower side of the this rising channel and drop below the 63.7980 zone, approximately around here, in order to go for further decline. So I'm keeping an eye on this one. So let's see how all this is going to play out. Now, crypto world, Bitcoin drifts lower, drops below this 42,321 zone. I talked about this, and basically this drop here confirmed a forthcoming lower low, and now well, the area that we're going to be aiming here for, of course, the very nice support zone lies somewhere around here near the 28,990 zone, or we can round it up here towards that 29,000 mark. So basically around here, and approximately around here. But again, we'll go step by step on this one. This is a very interesting one. This is a very interesting situation here. We have reached this 38,711 zone, marked by the high of the 29th of January. So good test here. And now the big question here, can we see a further move? So given that we already had a test of this hurdle, I'm going to take a bit of a careful approach and cautious approach here, and if we do drop below this area, then yes, I'll aim for lower levels. But if we don't, we might see maybe a bit of a rebound and maybe a climb back up here. But for me right now, I would say I would prefer, now this is where I'm going to drop my upside arrow here a little bit lower, and what I'm looking at here is for the upside, if we climb back above the 43,171 territory right here, this is where I'm going to start maybe aiming for a larger correction to the upside, and then of course we'll take it from there. Of course, let's not forget the monthly chart, and that's the kind of long-awaited thing here. And if you remember, at the beginning of this month, I said to you guys that in April, we formed a possible doji here, which is a reversal signal, and well, this is the result we're getting. We're actually getting that reversal here, and now, of course, we just need to see how far this reversal is going to drag. But to be honest, everything's in line, and everything's in line with the scenario of 2017-18. So basically, at the moment, I mean, that's what I'm considering here. Maybe a bit of a further decline, but let's see how all this is going to play out, guys. Of course, I mean, while I'm on the monthly chart, Ethereum, quickly on that, you can see a big, huge pullback here. Still, the candle is in the monthly candle is in positive zone. But we are seeing a bit of a nice deep retracement. So, and the similar story with Ripple. I mean, Ripple is also now in the red for the month. So, yep, let's see how all this is going to play out. But jumping quickly back into daily chart on Ethereum, you can see the drop here. I talked previously about this one, and I said that if we drop below this 3,500 zone, then my next target is the 3,171. Then, if we clear that, then my next step is the 2,858. Now, if we clear that one, then yes, my next target is the 2,548 zone here, which is around this upside support line taken from the low, the 25th of March. Ripple. So Ripple is coiling up, still stuck in this pattern, in this triangle pattern between the two lines here. Yeah, I mean, there's some weakness, as we can see. So basically, at the moment, I mean, cannot really do much, and we only need to kind of wait for that clear exit out of this triangle. Yesterday we tried that, but as you can see, the daily candle failed to remain above this area, above the upper side of the triangle, and this is the result we're getting. We're getting that decline, and basically now we're kind of stuck here again in between these two lines and within the triangle pattern. Now, jumping into a few pairs now, AUDCHF. So, I talked about this one, and I said to you yesterday, guys, that basically keep your eyes on the this hurdle, the 0.6981 territory, which is acting as a nice area of support for now. For now, it's acting as a nice area of support, but if that gets cleared, guys, I mean, this will confirm a forthcoming lower low, and yes, we could see further decline. So at the moment, be very careful. Don't rush into anything yet. If we do see that break, yes, wonderful, we could go lower. Basically, an idea here could be that, let's say, if we see that break, we start aiming lower. We quickly, if we are in profit, for example, here we quickly put our stop loss on break even, just to kind of let's say avoid any problems, any reversal problems, and then yeah, we just can start aiming lower. And basically, but if this suddenly reverses back up, I mean, at least you're kind of protected and safe. So yeah, be careful with that, guys. For the upside, I need to see a break of this downside line and the push up of the 0.7088 level. USD JPY, very quickly on this one. So approaching this upside line, taken from the low, the 6th of January. However, as I mentioned before, that preferably I need to see a push above the 109.70 barrier right here in order to aim for some higher levels. Well, I mean, at the moment, I would say that it's still far away. I mean, unless it sharply rises again and pushes higher, there is a chance for this one to move higher, to be honest, because looking at this whole pattern here, I mean, this is just we have a nice, beautiful, strong candle here on the 12th of May, and if we take a look at these bearish candles here, like after the 12th of May, the following 4 candles were bearish, but their bodies remained within the range of this bigger candle here on this bullish candle. So in a way, this kind of suggests that there is a possibility for a pop higher. However, me personally, I prefer to, in this situation, I prefer to basically it kind of yeah, it's this is what I prefer here. I prefer to see a push above this barrier first, because this way this would confirm a forthcoming higher high, and more buyers could join in. So I can see there's a question in the chat room here. Sorry, is the candle not also a special one because it covers the whole day before? Let me just jump back into WTI oil. So well, this is the candle here. This is the 18th of May. This is the 18th of May. This is the trading activity that happened during the 18th of May. So it's not really the day before. So unless you can maybe clarify this, Evo. So yeah, but basically this candle here, again, you can see it's already running. That's today's trading. So so yeah, maybe I'm not getting the question. I do apologize for that, of course. Yeah, but yeah. Now, quickly jumping back into some pairs, GBP Aussie. So continues to push higher. So yes, I'm still monitoring this resistance area right here between the 1.8235 and the 1.8265 levels. I need to see a clear breakthrough that one in order to go for some further upside. We can see that, for example, we got some data today from UK. And we got their inflation figures, which, for example, the CPI, the headline year-on-year CPI figure came out at 1.5, which was better than the forecast at 1.4, and definitely better than the previous number at 0.7. So plus 0.7, of course. However, the core one on a month-on-month basis declined just slightly. But nevertheless, to be honest, all the rest of the figures, the PPI outputs, all these are in green. So this kind of helps support the pound right now. Yep, at the moment, guys, I mean, looking at this technical picture here, everything's leaning a little bit more towards the upside. However, I would prefer to wait for that break first of this whole area and then go for some higher levels at the moment, because I'm very careful here. If suddenly it starts drifting back down and falls somewhere below this little territory, well, actually, if it starts falling below this little territory, the 1.8107, then yes, we'll be very careful near the 200-day EMA. But if this 200-day EMA gets clear, then the rate drops below the 1.8061, then yes, a larger correction to the downside could be possible. And finally, EURUSD. So EURUSD continues to push higher. We also have the Eurozone CPI figures coming out today, so keep those in mind. But for now, everything's looking quite nice here, I would say. And yes, we managed to reach this 1.2243 level. Now let's see if we can continue pushing further north. If we clear this area, we stay above this 1.2243, which is the highest point of February. If we stay above it, then yes, my next target is the highest point of January, near the 1.234950 zone, approximately around here. And then we will take it from there, guys. So right. Okay, guys. So I can see that. Yes, I can see, Evo, that what you're saying here. So I'll look into this. But okay, I'll look into this. But I don't think that's the case. But anyway, let me just check. Of course, maybe I'm wrong on this one. Of course, don't get me wrong. But anyway, guys, I hope you found this useful. Thank you very much for watching and listening. If you want to catch my video later on, my traders' tea time as always, that's 12:30 GMT time. For now, I hope you have a wonderful trading day. Stay safe, and I'll see you later. Thank you very much, and bye-bye.